Everywhere around the world, in every market, investors are trying to get more exposure and more access to the asset class known as venture. Early stage companies that are just financed, that have some traction, but that need more capital, those companies are often very difficult to value. And the reason is they're private, there's not a lot of information out there, there's not a lot of track record. But James, at Oddup, you've been able to create a platform that helps value these companies using what you call the benchmark valuation, taking in all kinds of inputs that are objective, quantitative KPIs, as well as subjective ones, and forming a valuation, and you're doing it in real time and updating it in real time. How do you make that technology work?
So the benchmark valuation is as simply as if we were to list this company on a stock market somewhere, say the NASDAQ, NYSE, what would the valuation be on that day? So the benchmark valuation changes every single day for every single company of 100,000 companies on Oddup. So there's quite a lot. Let's look at ride sharing, for instance. You look at Uber or Lyft that's raised a ton of capital, but then if you look around the world, there's a lot of other companies that have got maybe even more users. Sure. Let's look at Didi, Grab, Ola, who are all doing in that same marketplace and how they're growing alongside the industry, the sector, location, and ultimately how those companies are then getting valued as is.
Well, when you're looking at those KPIs, and take ride sharing, and you're looking at KPIs and revenue growth, users, revenue per user, all those types of things that are relatively objective. But then you have a whole subjective element to the benchmark valuation, social presence, the team, who are the investors. How do you weight all those, call it less objective, less quantitative, more subjective measurements?
I always use the example of if I've got $1 million raised and I'm a hardware company and I set up shop in, let's say, Kansas City or Shenzhen, same team, same everything, what chance of success have I got? Now, when you look at location and you look at sector, well, being in Shenzhen, you're of course going to have a better chance of success because you're that where everything is being created. And so when we look at benchmark valuation, we also look at other factors, not just the company, but where, who's their investors. So the same thing also in where you are and what sector you're in. So if I look at blockchain, for instance, Singapore is better than, let's say, Shanghai at the moment, given the current regulatory rules.
How do the algorithms work to constantly reset those valuations every day? Because you don't have the benefit of the NYSE or the NASDAQ and the liquidity of markets to tell you where it should be.
So we've spent a lot of money and a lot of time getting the AI and the machine learning components done. So now we can rate every single startup on our platform within 2 to 3 minutes. And so every single day, every company's rated, no matter where they are, and they're compared to other places around the world. So we used to be in Asia, now we're comparing it against a US or a European company or an African company. So this is done by it used to be done by humans, and now we're actually done by our team of data scientists. It's way bigger than our team of researchers because we're actually always building the technology to help this done automatically.